Hey guys, this is Simon with Trade and Perform Coaching. This afternoon, I wanted to go through and explain what a stopped out buyer is in our process for trading, right? So, one of the things we look for, um, one of the things we look for is confirmation that someone has been stopped out who attempted to turn the market prior to the low or the high being set. The reason for that is because if they get stopped out and then you get back above them, the market tends to have a strong reaction in the opposite direction, particularly when you're coming into key trade locations. So just before I get started, if you'll take a minute to read the disclaimer, it basically says past performance is not indicative of future results. I'm not trying to sell you anything. I'm trying to help you with your trade plan by sharing my trade plan. And if you'll just read this disclaimer, we can go from there. So, and if you don't like what's in that disclaimer, you can just turn it off and roll from there. So this will last, my goal is to have this done in under 15 minutes. So let's talk about what a stopped out buyer is. And what I'm going to use is a very large range chart to explain this. Let's use something that doesn't have any algo on it. It's just the bar itself. We'll erase these lines real quick. And then we will push this out so we can see it. So it's reloading. Hold on one second. I love it when it does this to you when you don't need it to. Let's see. 2 points is a 8 range bar. We'll just load 30 days to make it quick. Okay, so pull this in a little bit. 2 range bar. And so I'm going to show you from the high today what they meant. Now I usually trade on, not always on a 2 range, sometimes on a 1.5 or 1.75. But it's a very small bar, and it lets me, what the advantage to this is, it lets me see where buyers and sellers are coming in. So what I am interested in most, so like everything, there's nuance and slight variation to the setups, right? So my only goal here is to explain to you what a stopped out buyer is and why it's important. So as we're moving up, I'm going to guide you through the chart, and I'm going to give a couple examples. As we're moving up, right, each of these locations becomes a swing high. This, 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 and this. And you'll see there the orange dotted line is just following the zigzag of the Wyckoff waves that I have at the bottom, right? So I'm seeing where buy and sell waves come in. So I'm going to make that bigger for you so you can see it clearly. So each of these are a peak. So why is that important? Well, prior to each peak, what you will see is that there's, so from this peak, this was the last push down. From this peak here, this became the last push down. From this peak here, this became, in essence, they become your stopped out sellers, right? In other words, someone came in and said, hey, I think we go lower from this point. They tried to sell and they failed. How do we know they failed? So you have to go with some suppositions. First supposition is they put their stop right on top and they said, wow, I just hope it rolls. Right now, I realize in the real world that's not how everyone trades, but it is how it works from a algo execution standpoint, how the market reads those various algos and makes those decisions. That I do know, right? So when I look over here, this is the high. This becomes via Wyckoff the last wave down. Okay, so now I have a high. I have my last wave. So the question is, well, Simon, how do you know when to take it? And I can explain it. I want to see from this perspective only, I want to see a complete close underneath, right? Like this. And then hopefully a backside test of some sort with a stop on top of that stopped out buyer. So this area essentially becomes my short location. Now I'm going to show you the same concept for a long. Okay, they don't all work, but most of them do, right? So as we're coming down, see how we come down into this retrace, so we can get to the chase. As we're coming down, when this low gets set, this is my stopped out buyer. The last, stopped out buyer. So someone came, the market rolled down, someone tried to turn it and roll it back up, then they got underneath and they pushed lower, right? Hence, stopped out buyer, stopped out seller idea. So I know automatically when looking at this chart that unless I get above this point, right, which I'm right over here, right in here, I know unless I get a complete close above that point, I'm not long, right? Now, we set a new low over here. The last person or group of traders to try to push up was right here. Now, why is this important? Because I know once I get over this point, meaning a full bar, just like on top, this is my last stopped out buyer. I know once I get above that stopped out buyer, right, that I now have a very good chance, right, a very good chance of that holding and then being pushed out like so, okay? There's other little rules to it that I explain when I'm either in the room or I'm coaching, right? So since you're watching this, you've probably been to tradingperform.com. The other thing I would suggest is if you have any questions, you can email me. The email is tradingperform, TRADENPERFORM @gmail.com. And there's actually several steps after this, but the important part to take away from this is on the last stopped out buyer, the last stopped out seller, as the case may be. I'm going to give you one more example, and then I'm going to cut this video. So we're going to look from the top over here, right? So this is just a random on Monday, right? So see how originally we hit a high over here? So sometimes it can be tricky sometimes, right? So see this high originally? This is my stopped out seller, down here, right? When I get up here to a new high, this becomes my stopped out seller. So wait, I want to hold on a second. So see once I get that stopped out seller and I've closed underneath, you can see that sometimes at the very top, they came back out and took it by a one tick high, but it's still the same concept. It doesn't mean that you'll trade. It does not mean that you will trade without losses because the actual algo setup goes by an algorithm and we're looking for a particular setup, A, B, C, or D, but we're looking for a setup within this structure, right? But what you do know is once you get underneath, you have a very good chance of going down. Now this set a new high, which meant you shifted to this stopped out seller right here. You can see how they tried to hold it right there, but once they got underneath, long liquidated, right? I'm going to show you the other side here of the long and how it worked, right? So we're going to erase all this. Okay. Once you get, as we're coming down, right? So I'm going to show you that whole structure of the down move there. Right. So here comes the down move, and I'm going to cover the stop that obviously would have taken place over here, right? So let's cover this one first. We'll cover them in sequence, right, to see how this would have looked. So remember, so see how that looks like a stopped out long when in reality you already made the push up off the low, all the way up off the low, right? And I want to show you something. See how this was the high? So this brings up a great point. See how this marked the high right here, right? That made this the key. And see how no new high was set? So when you look at this, this became the area you had to break in order to go lower. So see how once you get underneath it, how they backside test it, and it keeps rejecting? This is giving me a very clear idea of if we're going to break, where we're going to go lower. And you're going to see over here, right, in this setup, which I just showed, see how it came up? It set a new high right here. That makes this my stopped out seller. And they came back, they one ticked the high, but the second close underneath, or the close underneath the last stopped out seller. And long liquidation city, and they just crush everybody, and that's just seems to be how they like to do things. So, and then when you look in the morning, one more thing. And again, the only point of this was not the actual entry, it was understanding, right? So sometimes people will ask me, well, what about a huge move like this off the bottom? So see how this is your last in this move, this is the important stopped out seller. So see when there's a long distance to get back on, they usually end up acting as support, right? So what do you do in that situation? You can come back and use this one here. But what I find is, even though the roll down was you would have had a profitable roll down from this point if you had taken this. However, for me, I'm trying to figure out where the larger break's going to come from. So I would have either maybe on a smaller time frame, it's set up somewhere upstairs in this area. But from this time frame, I would have known it had to get long from here, and I would have rather played it for the stopped out buyer. So see how it hit this low? I would have rather played it with the close above here for the pushback up. And you can see that would have been quite a profitable trade from there. It also, so remember there's an algo that's tied to the actual entry or exit, but that describes a stopped out buyer and a stopped out seller. And if you have any questions, you can hit me. I try to keep it short and sweet. Again, this is very fundamental to understanding how to get good trade location and make good money in your day trading. I couldn't live without it. That's how important it is. So anyways, this is my first run in explaining it and kind of getting specialized into one simple explanation. Let me know if you have any questions. You can email me. If you'd like a trial to the room, email us as well. Thanks and have a great night.